Hello traders, Corey Mitchell here. In this video I want to talk about how to read price action. I am predominantly a price action based trader, which means I look at what is going on the chart to help me make trading decisions. And in this video we're going to look at how to spot reversals and trend reversals, and of course to spot a trend reversal we have to be able to analyze the trend as well. So we can do this on any time frame. I've chosen the hourly chart. We're only going to look at one time frame, but you could do this on a 4-hour chart, a daily chart, 5-minute chart. The same concepts apply. So we're going to look at, this is what you could think of as like a little glossary or the template that we're going to look at. So when we talk about trends, we are going to talk about impulsive and corrective waves, and impulsive or trending waves are bigger waves and corrective waves are smaller waves. So corrective and impulsive waves or trending waves are what allow us or allow the price to make progress in one direction, because trending waves are bigger and corrective waves are smaller. So let's start at this point here. We have a large down wave, and that is relative. It doesn't mean it moves a certain amount or anything like that. It's all just relative to the price waves around it. This is a bigger wave followed by a smaller wave followed by another bigger wave. So this is how the price is making progress to the downside. The moves down are bigger than the moves back up. Then we have a big move down, followed by a smaller move up, followed by, again, a bigger move to the downside. This also creates something you'll hear a lot in price action is higher highs, higher lows, lower highs. And what that is each of these high points is lower than the last when we're in a downtrend. So the price is moving down. Then the next high is lower than the prior high, and same with the next one, same with the next one. And then when that starts to shift, we have a potential trend reversal. So here is a situation where we have a similar high, and we've also had a similar low. So we were in a downtrend making lower lows, lower highs. The moves to the downside were bigger. And then something interesting starts to happen. We have a move down here, which is matched by an equal move to the upside. So that doesn't tell us that necessarily to get into a trade or anything like that, but what it does do is it makes us question that downtrend. It is our first sign that once we get back up to here and we've erased the prior downswing, it doesn't quite fit the tenets of a downtrend, which is lower highs, lower lows, bigger moves to the downside. Now we've had an equal move to the upside. Then when we get another move to the downside, which is of equal size, that also gives us pause. We've basically, you could say we've negated either the upside or downside movement, so we're simply moving sideways. Another thing we can add is support and resistance. They are simply these trend lines, but people will typically draw them where the prior highs and lows were. Extending them across, we can see these two marked potential support area. The price bounced off of them. These two are a potential resistance area. Price goes back up. And then eventually we have these smaller waves. We'll talk about small waves and big waves in the sense of, we discussed already, we have a move down, a corrective wave. So that's a move against the bigger trend. But the question people ask is, okay, well, what about when you have all sorts of little waves and they're all making up a big wave, but how do you know which one to look at? How do we know what we're analyzing? And what I like to do is I look for big wave direction as my, we can think of this as your primary direction to trade. And then we wait for small wave confirmation. So let's talk about what that means. Remember, in real time, we're never going to know what's going to happen in the future. All we can say is this still a valid trend? Do I want to still be trading it? Do I want to be trading in the trending direction? Or do I think it may be starting to reverse? What evidence is there to support the trend? What evidence is there to support a reversal? And what evidence is there to support sideways movement? So these are the questions you're always asking as a price action trader. And then you're also going to be asking yourself, if any various situations develop, what does that tell me and how am I going to react to it? So here, down wave matched by an up wave. That draws the downtrend into question. But it doesn't necessarily tell us we need to go long or anything like that or buy. We could still view this as a downtrend at this point right here. So at this point, we don't know how high that price is going to go. At this moment, though, we've made a move down, and right now we're still making a lower high. Because this, we don't know what's going to happen in the future. So at this moment, we're making a lower high. So in my head, I would be thinking, okay, we're making a lower high, starting to move sideways a little bit here. If the price drops below this level here, I'm going to enter a short trade, because then all the evidence is still intact for a downtrend. We've had the bigger move down, we've had a smaller move up, and now we're starting to move back to the downside. So to me, that would be a potential trading opportunity. But instead, we go up and we match that prior high. So the price has erased the down move. At this point, we could be saying, wow, we got up to that. So this means the downtrend is losing its steam, but there may still be some there. So if the price starts to, if we get some sort of pause here and then a drop, maybe I'll go short again. And it does, but then it stalls out right there again, and we start moving back up and we stall at that prior high again. Now we have all these smaller waves in here, but eventually one of them moves above these prior highs. We now have a bigger wave to the downside. So we were bearish or thinking the downtrend was down here. It was drawn into question in this area, and now we've had a bigger move to the upside. That tells us the trend has reversed. We don't need to see anything else coming after that, but it's very likely that the price is now going higher. That doesn't mean we buy here. That'll depend on your strategy. So reading price action is one thing, and then you're going to develop strategies once you know how to read price action. So they're two different things. But the price action tells us where our bias is going to be, which direction we want to favor. So as soon as I see this and the price start making a higher wave to the upside, I'm now looking for opportunities to buy. As we discussed right there, big wave direction tells us the way we want to be trading. So in this case, we've had a big move to the upside. I want to be going long, but I have to wait for small wave confirmation. Now this is different than a corrective wave. What I'm talking about when I talk about big waves and small waves are, this is a big wave up, but it's filled with all these little gyrations. So you can think of small waves as gyrations, I guess, or those like wiggly movements. Gyrations or wiggles. So we have all these wiggles to the upside, but ultimately they've all moved in one direction, and we've created a big wave to the upside. Now we want to start looking for what we've talked about before. We want to compare big waves to impulsive waves, trending waves to corrective waves. So we want to look for some evidence that on the next pullback it's running out of steam. So we know we want to go long. We know the price is going to pull back at some point, and I'm going to look for an opportunity to get in. I'm going to look for the wiggles to tell me when it is a good time. And how we're going to do that is just what we talked about before with these impulsive and corrective waves. We're going to do the same thing. We're going to analyze how they're moving, and with small waves or the wiggles, what would tell us, once this starts dropping, what would tell us that it's going to run out of steam? Think about that for a second. Once we start to pull back, what should we be looking for to tell us that this sell-off is potentially ending? Well, we can look for smaller waves to the downside and bigger waves to the upside, because that'll tell us the trend is reversing. In this case, we're just analyzing the wiggles. We already know the trend direction is now up, but we want to get confirmation from the wiggles. So here, isn't there a band called the Wiggles too? Something like a kids band? Maybe I should change the name. Bigger down move. Here we have a little up move. So at this moment here, I'm still thinking, well, this looks a bit sell-off-ish. We've only had a little move to the upside. But then we have a tiny move to the downside. And then compared to that last little move, a bigger move to the upside. You can see this line here is bigger than this one. We've made a slightly higher high. So at this point, we already have a bit of confirmation that the uptrend is starting again, or this corrective wave is ending, and the next impulsive wave, the last one was to the upside, we're expecting another one to the upside. So we're already gathering evidence that that's happening, so we could start looking to get in on these trades once we have that evidence. Moves pretty much sideways. A move up. Bit of a smaller move down. Then we start moving sideways again. And it just can't gain any traction to the downside. So you have a little pop up. It's matched by a sell-off, but we stay above these lows. And I like to watch for consolidations. That's these little sideways movements here. So once the price breaks out of these, once we have evidence. So here, big down move, I'm just recapping. Big down move, smaller up move, but then small down move, bigger up move. That's what we're waiting for. It shows a shift in that the buyers are getting a little bit stronger than the sellers. And we're looking for that in these smaller gyrations to let us know to go in the bigger trending direction. Now I notice I put false breakouts on the glossary here. A false breakout is when traders are expecting to move one direction, but then it quickly goes the other. This can be very powerful when we've already established the trending direction and we get a false breakout in the opposite direction, and then it quickly goes in the trending direction. So let me recap that. So we are going up. We think this trend, we're eventually going to go back to the upside, because at this point we've established our big wave direction is up. Then we had a corrective wave, and in that corrective wave we had a whole bunch of wiggles, and those wiggles have now started to tell us we're shifting back to the upside. Get ready to go long. Then we had a consolidation here, and the price broke below it, but then quickly rallied. So it tried to go lower one more time and could not, and then broke above the top of this consolidation. So that would just help add extra, it's kind of like an odds enhancer. It helps us even feel a little bit more confident that the price is going up, because it tried to go one last time to the downside and it couldn't. So we're gonna, at least I would buy. That's one of my strategies at this point. So that's one of my favorite strategies. Once we've established a new big wave direction or a new potential trend direction, if we get a higher low, that's one thing to point out. We need to be above. If this came all the way back down here, what does that tell us? It draws everything into question again. We don't have a trend direction, because this wave would be as big as this wave. But that's not what happened. We made a higher low, which is important. So the low could have occurred there, it could have occurred there, it could have occurred there. We don't know. All we know is that we came to this point and then we had a bounce up, and then we can start analyzing that price wave. Some of these waves do not happen as slowly as this one does, but this is a nice example to show you how you can analyze these little wiggles to help determine when that shift is actually happening. But other times, wave up, small wave down, little wave down, still a bigger wave up. So at this point, we don't really know what's going to happen. The price is moving up. We do definitely have big wave direction to the downside. So we are thinking that this is eventually going to sell off again. But we need to find a good entry point. We can't just enter anywhere in here because we don't know how far it's going to pull back. So we want to wait for the signals. Where's the first signal, just looking at this price action here, that we get our first selling action that indicates the price is starting to move back down? It's this one here, because we have a bigger wave to the downside. So as if you were an advanced trader, basically as soon as you see a big drop, you could take a short. That's not how I trade. I usually wait for a bit more confirmation. So we get a bigger drop. This tells us the bias has shifted back to the downside. The wiggles, or the gyrations, so to speak, now align with our overall view that the price is going down. This big drop told us that. Nothing in this area here has contradicted that. We are making lower highs. We have a pop to the upside. It quickly stalls and then starts moving to the downside. Let's just get rid of that arrow. Quickly starts moving to the downside. So potential strategies. Again, this is not a strategy video. This is a price action video where we want to talk about analyzing price action. But in terms of how I do trade, as soon as we start seeing those drops in a situation like this, that is a potential short trade. So you could use the prior low. I think that's waiting a little bit too long. You could drop to a lower time frame here once you've established. It's like, hey, we had a pretty big drop here. Probably looks like momentum shifting back to the downside. Drop to a 10-minute chart or a 5-minute chart. And you'll be able to watch this little pullback here in a smaller time frame. I don't know if I'm going to be able to go all the way back there. So here, bigger wave to the downside. We have the small wave back up. And look at that. Price action helps us once again. Big move up. Smaller move up. What does that tell us? Momentum to the upside is waning. Bigger drop to the downside. So at this point, like I said, advanced traders could probably go short. If you are wanting to wait for a little bit more confirmation, you can see this tries to go up and then couldn't. And we have another drop to the downside. Tries to go up. So now we're starting to see bigger waves to the downside on this tiny time frame. And then eventually we just sell off completely. So there's lots of evidence here to suggest that this was coming. We had already established the big trending direction. We had looked at all these waves on the hourly, and we're starting to see that we had a pretty big sell-off here, which told us get ready to go short. And then if we drop to a lower time frame, we can really zero in on finding the points where the trend is turning. And this is all just by comparing wave size to the last waves. So let's go back to our hourly chart. And you don't have to drop to a lower time frame if you don't want. That's just one way. You could just stick to the hourly chart and just trade this. You could just trade on a 15-minute chart. You can trade on whatever you want. But it was just to show you that you can, say, analyze the hourly chart and then go into like a 5-minute chart or a 10-minute chart and really fine-tune it if you want. So that is basically the premise of trading price action. Once you no longer have lower lows, lower highs, and you start getting higher highs, higher lows, that tells you the uptrend or the downtrend has reversed and you've moved into an uptrend. And same with going from an uptrend into a downtrend. You had a bigger move up. This is an impulsive wave, and then eventually you have a bigger move to the downside. This tells us right there that we are likely, it doesn't mean guaranteed, we have to wait and see if the price actually makes a lower high and then starts moving down. But at this point, we start to consider the fact that this uptrend may be over. Little move up, pauses. You could, as a potential strategy, consider, okay, if it drops below this little sideways movement it has, it's probably going to head lower. Maybe it just drops a little bit and then goes back up. As long as it stays below this level, we still have a potential reversal. So we just want to analyze those little waves. If you missed up here, the market usually gives you at least, sometimes it only gives you one opportunity to get in, but it usually gives you two, sometimes even three. So in this case, maybe you dropped your 5-minute chart and you saw these little waves down. If you look even at the hourly, you have a drop here, a bigger drop than what's recovered, and then it drops again. So that is a bit of evidence, and it would be clearer if you looked this up on a 5-minute chart. You have a bigger move down, smaller move up. This is telling you that the upward movement is starting to die. So we're getting really potentially excited about taking a short because we know that based on this big down wave, another down wave is probably coming. But if you missed that one, we have the bigger wave to the downside, and then small wave to the upside. Smaller down wave. So at this moment, we've had a bigger up wave, smaller down wave. We don't know what's coming next. But at this exact moment, we can see we've had a smaller up wave because it's below this high. So if we start dropping again based on all this other evidence, we want to be going short. And that does happen just by looking at smaller waves. And you don't have to, people say, well, you don't know what's coming. You don't have to know what's coming. You're analyzing it in real time, telling yourself, if this stays below this high, this little wave up is smaller. So the wiggles are now confirming my big trend direction, which is down. So I want to be looking for those opportunities to get short. Once you have, when you're looking to go short, once the wiggles to the upside get smaller and your wiggles to the downside get bigger, that's giving you confirmation and you usually only get one or two, or maybe two of these little signals. You get like a bigger down wave and a smaller up wave, and then it's going to drop. Sometimes, like the other one we looked at over here, you get a few where you get to analyze a little bit more before it goes. But the concepts are all the same. We're just looking at trending waves, corrective waves. We're looking at these support and resistance levels, which are really just trend lines connecting highs and lows. And sometimes they're angled like this. And then when you get similar highs, they end up sideways. But the support and resistance levels are just areas where the price has stalled in the past. We talked briefly about false breakouts. If you go to thestreet.com/forex, under trading tips, there's an article on false breakouts if you want to analyze that further as a potential trading strategy. In this video, we just talked about it a bit as an odds enhancer. If you're already thinking of going long and you get a little false breakout to the downside, takes out some old lows, and then moves to the upside, that is a very good sign. That's what we call an odds enhancer. And under typical scenarios, we may not have a false breakout, and we're just looking for the little bits of confirmation, those little higher lows or smaller waves to indicate that the price is starting to move back in our bigger trending direction. So you want to look at the big waves for your direction you want to be trading in, and then you wait for the gyrations or the wiggles to start moving in the direction of the bigger trend. And depending on if it's a down move, you're going to wait for bigger moves to the downside, smaller moves to the upside in the wiggles. That's going to give you confirmation to go short. If you're going long, if you have a big upward move, so you think the trend is up now and the price is eventually going to go higher, within the wiggles, you're going to wait for bigger moves to the upside, smaller moves to the downside. That's your confirmation that that correction is running out of steam and could potentially run to the upside again like you expect. So that's how to read price action. That's how to analyze the trend, spot reversals in real time as it's happening. You're going to take that information and then you're going to try to create an actual strategy of it and write down exactly how, when, and what you're going to get into, how you're going to trade it, where your stop losses are going to go. So that is your next step, and we'll do other videos on strategies, but a lot of the strategies I talk about are going to be related to price action. This is your starting point, understanding this. So watching a video is not going to make you an expert at this. You're going to have to go through charts. I recommend going through whatever you have, 15 minutes a night, an hour a night. Just pull up random charts and just go through, start drawing in the waves, noticing how far they're running, comparing them to each other, and then start working on your thought process. Just cut the chart off somewhere. Look at the lines. Say, okay, where do I think this is going to go? What scenario is this a downtrend? What scenario does this become an uptrend? In this moment, if we stay below here, we're either moving sideways because these two match each other. But what happens to make this into a downtrend? If we make a lower high and then start making lower lows, that's a trend reversal. So just go through and draw the lines. Think about big waves, small waves. Think about the gyrations. Think about what's your impulsive waves, what are the corrections. And all these things should help you analyze your charts much better, whether you're a day trader, swing trader, investor. It's all the same. It's all, no matter what time frame you're looking at. So I hope that helps you out. And until next time, happy trading.